Hi guys, Brett Warren here, your trusted Brisbane resource. I'm down here in Melbourne for the renovations and development workshop, and lucky enough to come outside with Andrew. How's things, Andrew?
Yeah, very well. Beautiful Melbourne
Yeah,
weather.
beautiful sunny Melbourne down by the beach, which is about to take a dip.
Yeah.
Mate, on a serious note, there's been a lot of change and a lot of interest with different loans, lending loans, investor, owner-occupier loans and things like that in the past 12 months especially. Can you just run us through some of those changes and how they're affecting things?
Yeah, we've had real change with the interest only has been the primary driver, where the regulators have been trying to regulate and just reduce and moderate the interest only lending that was happening in Australia. We're a little bit overweight by world standards. It's about 30% of all new inflows are interest only, and we're around 41-42%. So the first thing they wanted to do was reduce that, and the greatest disincentive to most people is interest rate. So what we've started to do about a year or so ago, we started to have key differences between an investment loan and a owner-occupier loan, so a home loan. And that was to try and regulate the investment lending market. Then they've now gone one step further of trying to regulate the interest-only lending. So what are the key differences? So a P&I home loan traditionally now, you're still getting in and around the 3% range, the high threes, so sort of 3.8, 3.9, somewhere around there. Well, as soon as you go an interest-only home loan, you're starting to look in the mid-4s, and that's sort of now also where a principal and interest investment loan starts, in the mid to high 4s. And now, as soon as you go to an interest-only and an investment loan, you're looking in the 5%. So look, there's still high 4s, but you're 5. So you've got a high 5 now, a low 5, all the way varying down to high 3. So there's quite a rate differential between all the different products on the market. And then you can pay a premium if you're over 80% and paying mortgage insurance and things like that. So it's you nearly need the old abacus out to work out who's who there, mate.
Yeah, and look, it's at a stage now where most investors who were doing interest only, it's probably worth looking seriously at lowering some of that principal and interest and getting a better advantage there.
And when I spoke yesterday, we gave an example where someone going to a principal and interest loan, it was a loan of $650,000. The difference between the higher interest only rate and the lower rate but paying principal and interest was only $300 a month. But the net effect of paying principal and interest allowed them to borrow an extra $150,000.
Wow.
So, you think the short-term cost of $300 a month, which is $33,600 a year, versus the ability to borrow that bit extra money by just getting your situation in the right order, I think is a pretty big opportunity to still look at how you can be a successful investor in the current markets.
Absolutely. And your thoughts on potentially locking, fixing kind of?
Look, and then if you're going to hold interest only and things like that, then fixed rates are certainly a good option. We're been at or near all-time record lows. There's no doubt that fixing for some people, especially with larger portfolios and things like that, is going to be a great opportunity. We're coming off the lows slightly, so but everyone's position is different. So you've got to make sure you do the right analysis. Don't just jump on a fixed rate because it's cheap. Do it because it's part of your strategy.
Sure, cool. No worries, guys. Look, I think at this stage of the cycle, it's probably more important than ever to speak to a professional and someone who knows what they're talking about. If you're talking about a difference of $150,000 just for choosing the right loan, that's something you probably really need to get advice on. So I really encourage you to speak to someone like Andrew and go through that process and find out what can work for you as an investor. Thanks for your time, Andrew. Good to talk to you,
Brett.
as always.
Always
Thanks
good.
again. See you.
Thanks, mate.